rates in the country and what is happening within that realm. I'll be introducing my guests very shortly, but let me just give you a preamble. In the early 1990s, government carried out a comprehensive review of the banking sector that was fully liberalized, allowing for more private sector players to participate in the designing and execution of the financial architecture. That has had its problems, as many of the people who can now be able to lend or give out money at a cost are increasing in number and increasingly doing things their way. That is what some people think. But what is the architecture like, and how can we move forward to ensure that the customers or the citizens are not duped or exploited? I'm joined by Edith, Mrs. Edith Tusuubira, the Executive Director of the Uganda Microfinance Regulatory Authority. She is on my immediate left. Many thanks for joining us this morning, Mrs. Tusuubira.
Thank you, moderator.
And Allan Tayebwa is the Managing Director at Goldmine Finance. Thanks for joining us.
Thank
and
you.
on my extreme left is Francis Muhire, an economist and a seasoned commentator, and also usual suspect on MorningAtNTV, I must say.
Thank you, Igenya, and a good morning to our dear viewers.
Great. First and foremost, I would like to throw it to the Executive Director of the Uganda Microfinance Regulatory Authority to give us a preamble of the state of affairs when it comes to the lending and interest rates architecture in the country.
Thank you very much, moderator, and good morning, viewers. As you've already been told, I am Edith Tusuubira, Executive Director, Uganda Microfinance Regulatory Authority. I just want to set the scene. How do we come into place? We are implementing the Tier 4 Microfinance and Money Lenders Act 2016. That therefore means that it came into place around 2016 after so much discussions around the country about what was happening under microfinance. The microfinance sector was then at that time growing and growing steadily and very fast. However, with whatever comes very fast, sometimes also vices come into play. So there was a lot of cheating going around, and the sector was growing because Ugandans were very, very actively engaged in small businesses. So there's lending that is now coming into place, and government chooses to come up with a regulator in the sector, so that we can have some discipline. Albeit what we are going to discuss, that the discipline is yet to be fully achieved. And so we don't necessarily control interest rates as of now, because much as the law under Section 90 encourages us to advise the minister over the interest rate, and then coming up with interest rate caps, it is unfortunate that much as government took a position, the minister said we should delay this one so that we can allow them to sort themselves to behave. Unfortunately, the behavior did not come into place, because what we are discussing now shows, and we have actually discovered, that some people are charging even 20% per day. Some, unfortunately, even 30% per day. Unfortunately, Ugandans are being cheated in this process. And so we welcome the directive from His Excellency the President to ensure that we get back on to behave. The market is getting out of hand. We are experiencing very high levels of default, and as a result, people's properties that were offered as collateral is being taken over. And yet we have so many ways we've gotten innovative ways of getting collateral in place replaced. We have simple, very many initiatives. I don't want to get into that. However, we are supposed to regulate money lenders. We are supposed to regulate microfinance, non-deposit taking institutions. We are also supposed to regulate SACCOs and also self-help groups. We have done a lot in that area. So many things, as you'll hear, if time allows, we have done. But even when police existed from us and when Uganda came into place, we still have people who come against the penal code, doing all sorts of vices. Uganda Microfinance also still has those who don't listen. It doesn't mean that all money lenders are bad, but there are those who are really chaff in the market, and we shall sort them.
All right, the effort is no doubt commendable, and if we can achieve the kind of landscape that you express hope, then of course we shall ensure first and foremost reduced levels of stress and depression within the population. I would like to go to Allan Tayebwa, Managing Director at Goldmine Finance. You're a money lending institution.
We're Tier 4 microfinance
Tier 4 microfinance institution.
Yes, yes.
Within the framework that is currently provided for under the mechanism of interest rate regulation by the Bank of Uganda, you are allowed to do ping pong within a frame, either on the lower end or on the high end. Just take us through exactly how you roll out and exactly what parameters you use in determining your interest.
Well, the parameters we use in determining interest, first and foremost, the sourcing of this money. How do we source money as an institution?
Okay. We
borrow from banks, right? Where everybody else goes to borrow. Now, if you borrow from the bank at 25%, at what rate are you going to lend at to cover your operational costs and make a certain interest rate, a certain premium, a profit of it? We are not charging 10% or 20% or even, you know, the 7% and whatever a month or a day. But we, you know, I'm not against what the president is proposing, but I think the problem is there. But the solution, I think there are better alternative solutions that would better support our economy and help to make the space more competitive. Now, if you listen, majority of the people who charge most of these rates are unlicensed. You will have, there are many more unlicensed money lenders than they are licensed. UMRA, as an institution, has licensed less than 2,000 money lenders in the whole country. Kampala alone, I can guarantee you, has got more than 20,000 money lenders. The law existed. Before UMRA came into existence, there was a law that regulated interest rates. Did you know that? The law that had been there since 1960s. You were not allowed to lend more than 24%. But guess what? People were borrowing at 20% per month, 30% per month. The best thing that happened to this sector was bringing in place the Tier 4 Microfinance Act that brought UMRA in existence. That's the best thing that happened in the sector. Now, ideally, what was UMRA supposed to do? Regulate, educate the people in the sector. Majority of these money lenders that we are talking about, one, are not educated about how to run a business formally. Majority of them are briefcase companies. They have no address. You will not call them and find them somewhere, especially the ones they are talking about. You understand? Majority of them are still making the mistakes of signing sale agreements when they are lending to clients. That is illegal. That is wrong. Those are not licensed lenders. Of course, because they are the majority, they are going to end up spoiling the entire sector.
Okay. There's something you introduced. I'm afraid I'm going to have to hold you there. A sale agreement and a lending agreement. First, explain that for our viewers.
So once a person has come to borrow, and most of these clients are desperate people. They are willing to do anything
you need the money at that time,
to get the money.
Yeah.
That's why you'll find people, this lender, because he's not licensed, he will tell you to sign a sale agreement because he cannot enforce a loan agreement before court or before UMRA or anybody else.
That's right.
So they will ask you to sign a sale agreement. And because the borrower is desperate and needs money, they're immediately going to sign off their land title or transfer their logbook and get money. But how are you going to track this particular person you've given your title and you've signed a sale agreement with? Because when you go to court, he's going to say, I bought the property. Under what premise are you going to say you borrowed money? There is no legal contract. But if you have gone to a licensed lender, and this is where I think our biggest focus should be, there is a person who is not licensed who calls himself a money lender. There is one who is licensed. When a borrower goes to a person's office, look out, are they licensed? Because if they are licensed and you have got a difference in the interest rate and whatever, go to the regulator. UMRA is there to solve that kind of need, because I believe that there are very many people who have gone to UMRA and found solutions. That's the sole purpose why UMRA exists. And this is the best thing that happened to this sector, bringing into existence UMRA. Now, of course, there are challenges that we've faced and that UMRA itself has faced, because I believe that if UMRA had got the capacity to travel nationwide, to be able to educate these lenders, to teach them about doing business professionally and competitively, this sector, the forces of demand and supply, would be able to bring down the interest rates because of competition. Majority of these lenders, I'll tell you, one, we do not know, we don't have access to cheap financing. Now, if I go to the bank and borrow at 25, do you know banks even lend at 48%? What rate is that per month? That's 4%. Now, at what rate are you going to lend at? These are some of the issues, the challenges that the lender is equally facing. Yes.
That's outrageous.
36%. Now, if this is the wholesaler, you're going to borrow from them at that rate. At what rate are you going to on-lend? That's number one. Number two, majority of the, and those are the few banks that even lend to lenders. Other banks do not lend to lenders. Now, who lends to the lender? It is you and me, the individuals who have their personal savings. Who are these lenders competing against if they're going to borrow from you and me? They're competing against the Bank of Uganda, which is borrowing at 18%, the bonds. They're competing against the banks, which are fixing money and borrowing at 15%. So you as an individual, if you're going to lend to this lender, how much money, what interest rate do you think they're going to have to promise you? These are the problems. They're probably going to promise you 5% per month. And how much do you expect them to lend at? So there are pertinent issues that, one, the lender is facing, but two, also, because of the illegal money lenders. I think those are the people that they should be going against.
I'll be coming back
the illegal lenders.
that aspect of illegal money lenders, because somebody was telling me the other day they attend to a section of customers that the established lenders are afraid to go to. But let me get the bird's eye view of this interest. I shouldn't call it a crisis, but somewhere that we don't want to be.
Well, you know, today's topic is very interesting, and I want to start by saying that show me your financial sector, and I will show you where you're headed as an economy. When you look at Uganda's financial sector, way back, let's say 1912, we had Standard Chartered Bank being the first commercial bank here.
1912.
Yeah.
Wow.
So when you look at our financial sector, where we are coming from and where we are, then you're going to realize that we are just living with aspirations. And these aspirations, of course, have been well designed, and, you know, the picture is rosy when you hear, you know, from our politicians. Now, the financial sector is the engine of any economy. How the government how the government handles it matters, and in terms of regulation. And, you know, you talk about the Act, the Moneylanders Act 2016. We are coming to almost how many years? 8 years. And we still have these issues. Now you can see where we have a challenge even before I give you the whole context. We are good at coming up with, call them the best, you know, whether policies or strategies, but when it comes to implementation, is a problem. Now, I want to give you, you know, some statistics, show you the real picture when it comes to our financial sector. First of all, only 0.4% of the population use bank loans as source of capital. only 0.4%. Where are the rest getting the money from? So, now, having said that, when you look at people today who are going to borrow, you need to first ask yourselves, why are these people actually going to borrow money? They want money for what? Most of them is actually not that they are going to borrow because they want to invest in business. Because after all, given the interest rates in the market, no one rational would actually go to borrow in order to invest in any kind of business. You're going to find that most of the people are actually borrowing for all reasons. One, you're talking about school fees, you're talking about medical bills, you're talking about housing or maybe mortgage, you're talking about food, and not forgetting about political campaigns. The people he's talking about, I call them the money sharks. They are all over. They even don't have physical addresses, but they have a lot of money. Whatever amount of money you want, they have it. They may not even ask you for collateral security, but you'll have to pay back. That is one. Two, you know, he has brought something very interesting. The first time I attempted to get a loan from a commercial bank, that is way back in 2015. I had just finished university. The government had said, we've brought money, youth funds. It's under different banks. I'm not going to name them, but you know them. I remember the maximum was about 10 million. So I was like, let me go for this money. I had my business plans. So guess what? I go to the commercial bank, one of the top 3 banks we have in this economy. First of all, they said, we are not going to give you this government's money because you're the first, it is your first time to come and borrow. Even you don't have, you don't have any history. So they're like, we're going to give you our own bank's money. Then when we see how you perform, then that's when we are going to give you this money from the government. First of all, I was not convinced. But I was like, okay, let me experience this whole process. You wanted to experiment. Yeah, I mean, it is your first time to get a loan. So they are like, you need to bring, what kind of collateral security do you have? Well, I didn't have a car, I didn't have a house, but the only thing I had was a plot of land, which is worth maybe over 40 million, and then cows. They even took me photos with about 6 heads of cattle. How much are they going to give me? 6 million. You can imagine. Now, as if that is not the worst, they give me forms, I read through. Do you know the interest rate? 38%. Wow. For me, I expected actually around between 20 to 25 because that is the average. That tells you that even before we talk about the money lenders, the loan sharks, even the commercial banks, they are charging high interest rate. They are practicing. So you need to ask yourself, why are these commercial banks even charging interest rate? We know the money lending, I mean the bank rate is around 14%. From the bank, the central bank's lending rate is at 14%. That's what the commercial banks are charged when they are getting loans from the central bank. So you need to ask yourself, why are commercial banks behaving like this? One, we have all the regulations, the policies, the acts and the laws, but they are not being implemented. Two, most of the commercial banks you have here, the ones that appear to be big in size, they are not here to lend the private sector or individuals. They are here actually to lend the government. That's why some of them, they even don't have branches outside Kampala. Why? Because the government has been the biggest borrower in the domestic market. So there's no way how a commercial bank is going to put money to lend, to the public out there when the government is actually there. So this tells you the real challenges we have in this country in the financial sector. So also the other point I want to make, and he hinted on it, saying that the money lenders should be actually sensitized. Let me tell you, even before you sensitize the money lenders, the mass out there, they need sensitization about financial literacy. Now, you're going to expect someone maybe who has a bachelor's degree to be aware what interest is. Go and do just a simple survey. You will get shocked. People do not understand interest rate. They even don't understand whether it is per day, whether it is per week, whether it is per year. Now, most of the money lenders you have, before I go to loan sharks, I have some experience. I worked with, I'll call it a licensed money lending company for over 3 years. I have experience because I would see customers come, and all I used to do was actually to do clientele, screening. I want to tell you that when you are charging, let's say, 10% as a money lender, which I think is the lowest, because I used to, gather information from even other lending, money lenders. If you're charging 10% per month, that amounts to 120% per year. Now, what kind of business can you borrow money at 10% per month, translating to 120% per year? What kind of business are you going to do? Now, two, the money sharks is talking about, I was impressed and disappointed at the same time, where I was getting out of a mini supermarket and two young men were seated just at the veranda with a placard, money lenders. They are just out there almost on the street.
For a customer who has failed to get the amount of goods they want.
Go to the parliament. Go to the parliament. You're going to get shocked when you go to their canteen and their money lenders will not even know, but for them they know. That's why I was telling you that even one of the reasons why these people actually go to borrow is for political campaigns. So that is the picture we have in this country.
All right, thank you. It's a very sobering one indeed. And looking at how things are, could, for example, you talked about solutions. Could capping interest rate be the solution or one of the solutions in this case?
Capping, it is one of the solutions. However, I think that there are solutions that are much better, I think, in my opinion. And given an opportunity, even to meet with the president, would best tell him what we think. Okay. What are some of the solutions that I think are better? Because capping the interest rate, are the unlicensed lenders going to be regulated by that? Absolutely not. They are already operating illegally. There are many people who are signing sale agreements. There are many of them. Are they going to be hindered? Because this interest rate was already capped before this Tier 4 Microfinance Act came. You are not supposed to charge more than 24%, but was anyone following that? No, absolutely not. So I don't think capping, I think what would best solve this situation would be, one, really, I'm fortunate that I'm now with the ED of UMRA, because the part is that how can we organize workshops to educate the lenders? How can we put out messages to educate the borrowers about who they should borrow from? This is very key and very critical. How can we have a fund or whatever it is, working with Microfinance Support Center, working with Uganda Development Bank, to be able to support the licensed lenders through UMRA? And UMRA would then put in place conditions. You can even regulate it by yourself. If you put in place a condition before you can borrow from Microfinance Support Center at, say, 12%, you must have gone through this particular course. You must have this, you can regulate the rate at that level. You understand? The same way government of Uganda, when it was giving out this youth money, youth fund, they regulated the rate, how much you can be able to lend to the youth.
That was denied.
Yes, precisely. So you can be able to regulate the interest from that perspective. Okay. But capping the interest rate, I have not seen it work anywhere in any country. Even in Kenya, we have a very good example in Kenya, where the interest rates were capped. What happened? The cap was eventually removed, because what that does, it encourages more the black market. The unlicensed lenders become more unlicensed. My thinking is actually why many of these lenders are choosing not to be licensed. This was one of their biggest fears, that they are going to come out and they are going, this is a carrot and stick. They are going to give them the carrot, they come out, and after they've come out, we are capping your interest. What are they going to do now? We have the regulator with us. They are now choosing. In fact, if you listen, if you're on any of these forums, you will know what these people are talking about. And me, personally, I've been able to work with UMRA to give support to actually promote this very act, because we lend to these people as well. We lend to these lenders. Our interest rates, imagine we charge 3 to 5%, but even us, the president was saying, how can you charge 3%? 36%, but that means yet you're going to borrow from the bank.
The president is not living in this economy, given that statement.
Yes, because he's saying, how can he charge 36% per annum?
Tusuubira, you've had what is no doubt very sobering submissions from Muhire and, of course, an attempt to come up with solutions from Mr. Allan Tayebwa. But within the framework of your mandate, there is what you can do and what you can aspire to do. I don't know which one you want to go first for.
I'll handle
your aspirations or what is within your means.
First and foremost, I want to appreciate the comments from my fellow panelists, because the truth is out there, the market is not okay.
The market is not
Things are not good. That is just the truth. However, we want to tell you that right now UMRA has grown over 600% in the past 4 years. It therefore means that, and we are regulating 1,736 institutions.
1,000.
Yes.
700.
And we are just about 35 staff in total. We have gone all over the country. We have been overstretched.
Uganda Microfinance Regulatory Authority has 35
staff. And we have grown over 600%.
Right there is the problem.
And so I can tell you that we are trying our best.
That's right.
But the truth is, out there are people who are not yet complying.
Let me understand.
Every year, we have worked so hard to ensure that we get to reach them. And we are reaching as many as we can. I can assure you, if UMRA is given enough time, all those guys will come out. I also don't think that the first thing to do, and that is why it was stated by Minister of Finance to cap interest rates. But it was left in the law so that in the event that people do not behave, we shall get to them. And for sure, I believe that quite right now is the time to do so. This is the reason why. Right now, technology has overtaken us. Most of this you are seeing is being done on apps, digital lending. And so will even those licensed are actually doing this. They go out there, they get Ugandans who are non-suspecting, they send you don't have money, and somebody says, I can give you 100,000. They don't tell you the rate immediately. And you will bring back this much. Every day you don't bring back, they'll charge you 30% of the existing. So they end up with things to do with compounding interest, because their borrowers are not necessarily paying. Part of the reason, and as he has already said, is because there is little financial literacy going on. And how can 35 people run the entire country? How can they even be able to control 20,000 money lenders out there? Out of the 20, money lenders are 25,000. But right now we have over 40,000 SACCOs registered. Most of them will be under the ambit of UMRA to license. We are talking about self-help groups. Those ones are also over 100,000 in the country. So the sector of Tier 4 is so huge. We only need to continue working, and I appreciate government for having started. The good thing, right now, the market is not where it was in the beginning. The market right now has moved. There is more financial literacy. We only need to do more. And I can assure you, if you don't behave, we are still coming, and the caps will be introduced until we see there is control in the market.
Mr. Tayebwa is already freaked out. But looking at this whole thing, interest is pretty much a demand and supply issue. And what I know is that lenders, especially those ones that fall maybe above your tier, are urged. There's an appeal that is sent out by the Bank of Uganda and government. And there lies the problem also, to appeal to somebody. When you appeal to somebody, you don't have powers over them on what they will do. You're hoping that they will take your appeal and do what you think can be done. And that could also be a problem. Let me just take it to quickly and toss it to Allan.
So this is what happens. Let's say what you're trying to say. The central bank, in this case Bank of Uganda, has what we call the bank rate, which is around 14% as we speak. This is a rate at which it actually lends commercial banks. But also it shows every time it brings out the central bank rate, or the CBR, which as we speak I think is around 9 or 10 if I'm not forgetting. So you can see there's a difference. The central bank is lending at 14%, but then it goes ahead to bring the central bank rate, or CBR, at 9%, which is just a signal to the commercial banks that, hey, we are giving it 14%, but the CBR is at 9%. So to try to, you know, it is a signal. You're just actually requesting, if not begging, if I'm to use a different word. So because we have a fully liberalized financial sector, it is very hard to put a cap. As I have said, if you put a cap, then you're going to have actually the black market expanding. But having a liberalized economy doesn't mean that you don't have powers to regulate, because the government, even if you have a liberalized economy, you can wake up and say, no, this is too much. That's why in the Act you're going to find about 24% per year, not per month. Per month. So, but the question is, if you're just, you know, only playing with the power of just sending a signal, just begging, you know, of which these people are not going to comply to, because according to the law they are protected. For them, we are going to say we set the price according to, you know, the demand and the supply. And as we've said, the commercial banks, which are being crowded out by the government, because the government is the biggest borrower. Already that shows you that the money that is left for a few money lenders and loan sharks who are very patient and who are aware of what is required to get money from the commercial banks, they will go and get the money, even if it is at 34% or 44% per year. They know they will still make a kill, because remember, for them they are going to charge per month. So that is what is happening. So the government still has the powers to regulate. Now, is this problem going to end as we speak now? I don't believe you are going to solve this problem very soon, because you want to ask yourself, if you look at our economy today, what are the most lucrative businesses you have in this economy? Money lending is among the top. I mean, you're borrowing money, let's say, from commercial bank, let's say, at 40%, though we know the average is 20%. And you're lending this money as much as 10, 20, 30% per month. So if it is the most lucrative business, you need to ask yourself. I was getting some info that now even when you go up country, you go to Eastern Uganda, you go where, the money lenders have gone even up to the village level.
And that speaks of, just finalize that. And
so you need to ask yourself, who are these people actually behind this? Because now it is being structured to that level. Now, you're not going to stop people actually from going to borrow, even if the interest rate is as high as 50%. Because I've told you the main reason why actually these people go to borrow. They are going for medical bills, they are going for school fees. Some will not take their kid to a private school, not a public school, because you know the situation in the public school. Some will want to pay for medical bills, because you know what is happening in the public health infrastructure.
Others want to go for a good weekend and marry another wife.
Consumption.
Now, you had something.
I wanted to bring in the you know, I really believe that there is much more we can do than regulate the interest rates. There are many, and this is the outcry of the lender, I'll tell you. Like, they brought out the concept of the online, the loans, the apps and whatever. But do you know, for example, I have friends who have got these apps. Do you know that to use the MTN platform, they will charge you close to 5% before you put any premium? 5% per month on a transaction, actually per transaction, because it's per transaction. Now, if you're charging this person 5% to be able to use your service, how much are they going to charge? Now, imagine you're charging them 5% per transaction. Each time you do a transaction, the owner of the teleco takes that 5%. Then you're borrowing money at 2 or 3%. That is 8%. What are they going to charge to be able to give money to you? Remember, there is the risk of default. You know, what people forget in credit is that the one who actually pays for the one who doesn't pay. So there is that, you have to factor in that rate. And the default rate on these mobile loans is as high as even 40%. Now, if you're going to look at that, what are they actually netting? My thinking, my perspective really is still really going back to UMRA. And imagine they're 35. They've done such a good job. If only they were given more funding and allowed to reach out to the rest of the country, I promise you, we would not be having this problem today. I think the solution actually lies in the regulator. If they are funded more, they're able to go out more. When they came, we tried to do workshops with them. We tried telling them, look, this is the budget. Let's go out with you. Go to these places, to these districts. But there was no money to fund it. So I think my thinking is that rather than saying that, and I'll tell you the truth, we are going to have a bigger problem. What is the bigger problem? There is going to be more black market trading, because you see, the borrowers don't care. They are desperate. They are too desperate that they are willing to take whatever rates are thrown at them. Can you imagine a person borrowing at 30% per day? What are you going to do? How is it possible that in this market you're willing,
so to speak?
Exactly. Do you know that there are still people who sign sale agreements to this day? How are you able to say you've gone to school, you've studied, and you've signed a sale agreement? Why? It is simple. You are not desperate. You're desperate. You're not financially literate. Yeah. You're not literate about who is licensed and who is not, and you don't care.
Now, gentlemen and lady, I would be remiss if I do not allow us to delve into what has been happening lately, especially with regard to the big businesses that are also grappling with this same problem that the average Chris Higenyi grapples with. And according to the look of things, there is what doesn't appear to be natural. You know, if a business like Nzika, a poultry farm and everything that goes on with that particular entity, falters as a result of its loan obligations or failure to meet them, there must be a way, either a government bailout, not a system, but initiative, so to speak, to help, because it has a domino effect. If Nzika and the like are going down on account of failure to pay back loans because of high interest rates, then there are so many other businesses that are depending on Nzika, and the trickle down effect is going to be immense. This is something that it could be out of your mandate as UMRA to comment on, but as a watcher from the outside on what is going on within the economy, we could be thinking the problem could be illiteracy when actually it is bigger than that.
It elsewhere. Yeah. Okay. It is true that our economy is has a gap. We still need resources in the economy, and when you see what is taking place right now, it just means that really the gap is there, but it doesn't give us leeway to abuse the situation. And of course, in every economy, there will always be those who fail to, you know, you can end up in a default. Even
That's
a big
right.
business,
Even a
big
business.
banks have collapsed. International big banks have also collapsed at one point. So it therefore means that there will always be an outlier somewhere. However, what we are talking about right now is dire. I can tell you that UMRA recently conducted a survey of some sort. We haven't yet concluded with it because we are trying to come up with digital lending guidelines. The situation is as bad as some people are borrowing at 30% or more per day. One single day. So multiply that times 12 or times 365. Then you tell the rate. Who borrows money at that rate? And who will you expect to pay back? And these are, we can say, yes, the unlicensed are many, but also the licensed ended up with apps, and they're doing that. So there's an abuse that is going on, and I can tell you, because of that abuse, we are therefore coming. To regulate, we have to put the situation, we have to
Execution and
normalize the
enforcement
market.
will have to be improved.
Yes.
Allan Tayebwa, do you expect the big businesses to be opting for sharks in case they see the modalities of commercial banks and established lenders as too strenuous?
You know eventually everybody is going to become too strenuous and the black market is going to thrive. Why do I say that? You know, I agree there is a problem. What is the solution? Banks, he said that Bank of Uganda lends to banks at 14%. Who lends to money lenders? Nobody. Why are we not thinking of solutions for these people? They are there to fill a gap. They are not there. They're not there just to. They are there because there is a need. There is demand. If only 4%.
And an opportunity for them.
If only an opportunity is because there's a problem. There's a gap.
Yeah.
So if only 4% of the population borrows from banks, what happens to the 96%? So why not think of a solution for that particular lender? Why are we only thinking of them as a problem? The problem is only going to multiply. They are not just a problem. They're a solution, actually. If you're saying that they have reached to the bottom of the villages, that is because they're offering a solution. There is a need in those villages. What we need is to give a solution. Put in place financing for these people to access. Put in place something that is going to help them be able to teach them. Put in place workshops to teach these people. Because that's how they're going to be able to pass on that information.
All right, Francis Muhire, 1 minute. I'm wrapping this up.
All right. Maybe let me leave the companies which are struggling.
Yeah.
It's not really basic.
You can share a paper with us sometime online, and then we can be able to read.
There are so many. But what I want to say is I want to end with a solution. That we've seen laws, regulations, acts, until even directives have to come, meaning that the structures are not working.
Yeah.
So until the president realizes that actually his structures are not even in existence, that's why he has to come and give directives, then we'll keep on just thinking about this whole thing and not solve the problem. So the president has real effect. Put structures in place, let them work. He cannot do everything.
Institution building.
Yes.
All right. Thank you very much, Francis Muhire, economist and commentator for the submission. Thanks to you too, Allan Tayebwa, Managing Director at Goldmine Finance. And thanks, Mrs. Edith Tusuubira. I know there's something itching that you want to say, but I'm out of time and I still need this job. All right. That's it for our Kickstarter discussion, tabling the raising lending rates in the country. Now, housing is also another problem, and there are so many stakeholders who are coming up with initiatives to help the Ugandans be able to afford a shelter. That is very important. My colleague Priscilla Regina Naloga shall be coming up with that tech note. Stay with us.